Welcome to the Indoco Remedies Limited Q1FY22 Earnings Conference call hosted by Nirmal Bang Equities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vishal Manchanda from Nirmal Bang Equities. Thank you, and over to you, sir.
Hi, good afternoon, everyone. Welcome to the Q1 FY22 earnings call of Indoco Remedies Limited. We thank the Indoco management for giving us an opportunity to host the call. Today we have with us the senior management of the company, represented by Ms. Aditi Panandikar, Managing Director, Mr. Sandeep Bambolkar, Joint Managing Director, and Mr. Vilas Nagare, President Corporate Affairs and M&A. I now hand over the call to the Indoco Remedies management. Over to you, sir.
Thank you, Vishal. Good afternoon, all the participants. Hope you and your family members are all safe and healthy. Before we begin, I'm happy to share Indoco's new brand identity. We are proud to announce the launch of our new corporate brand identity with a redesigned logo. This new identity comes with Indoco entering into its 75th year of operations, and at a time when the company is on the verge of an unprecedented zeal for growth in both its domestic and global operations. The new identity captures our core values and the younger, bolder and dynamic nature of Indocoites. The bowing R of Remedies indicates the respectful bow to the heart of India, atop the I to bring out our core value, respectfully Indian at heart, global in vision. Now on to the business highlights. The net revenues of the company grew by 42.9% at rupees 381 crores compared to rupees 267 crores. EBITDA to net sales for the quarter is at 22.8% at rupees 86.8 crores compared to rupees 48.9 crores. Profit after tax to net sales for the quarter is at 10.4% at rupees 39.6 crore compared to rupees 17.2 crore. Earning per share for the quarter is rupees 4.30 compared to rupees 1.87 for the same quarter last year. Domestic formulation business. The company ranks 29th in the IPM with market share of 0.66% as on 30th June as per AWACS data. In terms of prescription generation, the company ranks 21st as per IQVIA. Revenues from domestic formulations business grew by 45.8% at rupees 215 crore compared to rupees 147 crore for the same quarter last year. Excellent performance of anti-infective and respiratory therapeutic segments resulted in a robust growth during the quarter. Indoco launched 2 products during the quarter, one Maricover lozenges under the respiratory segment and the second Methical 60K under vitamin, mineral and nutrient segment. Now on to the international business. Revenues from international business, formulation business posted a healthy growth of 59.7% at rupees 152 crore compared to rupees 95 crore. Revenues from regulated markets grew by 67.7% at rupees 128 crore compared to rupees 76 crore. Revenues from US business for the quarter grew by 71.9% at rupees 46 crore as against rupees 27 crore for the same quarter last year. The major portion of growth is contributed by brinzolamide ophthalmic suspension. Currently, we have 16 products in the US market, which comprise of 4 solid dosages, 10 injectables, and 2 ophthalmic suspensions. Revenues from Europe for the quarter grew by 65.4% at rupees 79 crore as against rupees 48 crore for the same quarter last year. Increased demand for analgesics in UK and AOK tender Germany supplies have boosted sales in Europe. Revenues from South Africa, Australia and New Zealand are at 2.9 crore against 1.8 crore. Revenues from emerging markets for the quarter grew by 27.3% at rupees 24 crore against rupees 19 crore. Coming to the API business, external sales of the API business degrew during the quarter. The degrowth is on account of higher captive consumption, which is at 63% of the total API dispatches. Revenues from CRO and analytical services for the quarter are at rupees 2.8 crore against rupees 1.6 crore. That's all about the business highlights for the first quarter, and I now request the participants to put up their questions. Thank you all.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, you may enter star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please enter star and 1 on your touchtone telephone. We have the first question from the line of Praful Bora from Systematics. Please go ahead.
Yeah, hi, thanks, sir. Sir, is the entire profit contribution from brinzolamide reflecting in this quarter in the US business?
Sorry, I didn't hear you properly.
So the US business reflects the entire profit contribution from brinzolamide, or would it also come in subsequent quarters?
Yeah, so I think the way it works is we supply brinzolamide to Teva. Teva then sells it in the market, and based on the sales, then the profit generated comes back. So if you're asking if this profit is equivalent to the kind of supplies we might have made to Teva, then it is not. It is more got to do with the sales Teva has got for the product in US market. That would have been selected.
Sure, yeah. So the question, yeah, exactly. So the question was the profit share from whatever sales we would have done in the last quarter, that would reflect in the next quarter, right?
Correct.
Okay, got it.
Apologies for my voice, please. I have a bad cold.
Okay, sure. And secondly, on the India business, so we saw very strong growth, in the first 2 months. How's the trend being, now in July that we're almost through with July and, half of August almost. Has the trend continued then?
So I will talk to you about July sales in the next meeting we have for the MBA discussion. But it is safe for me to say that although in the month of April and May, we got strong sort of tailwinds with a couple of products, mainly Carvol Plus and ATM, it is safe to say that the entire basket of key legacy products for the company did exceedingly well for the whole quarter, and similar trends continue for this quarter as well.
Good, thank you.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and 1. We have the next question from the line of Abdul Kader Puranwala from Anand Rathi. Please go ahead.
Yeah, hi. Thank you for the opportunity. So my first question is on the, so as the earlier participant was asking. So ma'am, if I see the India growth on the branded side or the brand specific side, then apart from 2-3 brands, which I believe there will be some benefit because of COVID, the growth in the other brands have been, in low single digit. So are we saying that the growth has now picked up in other brands as well?
If you are referring to the performance of the other brands, so other than Cyclopam and Sensodyne K, almost all the other products have grown very well in this period. And these products have also started doing well now.
Sure, ma'am. Yeah. And my second question is on the gross margin front. So even though in the India side there would be some benefit of COVID, but the gross margin, at least on an annual basis, has increased by close to 100 or 110 bips. So would this largely be on account of the profit share income what we have received in US?
No, it is the margins increase you see in this quarter have largely got to do with India business performance.
Sure, ma'am. And yeah,
this quarter, if you're talking only of GCs, it is the product mix in the India business. Yes.
Sure. And my final question is on the promotion cost. So, ma'am, how are we standing on this now? I mean, is there a complete recovery in terms of promotion cost? Is it back to the pre-COVID levels, or are we still seeing some benefit because of the digitization initiatives that we have taken last year?
Yeah, in Q1 we saw some benefit because of the second wave. There was not much working happening. So I would say around 60% promotion-related costs have come back. 40% are yet to come back. The bigger saving was in travel in the first quarter. We expect that to steadily start going up as the quarters progress.
Sure, ma'am. Understood. Thank you so much for answering my question.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and 1. We have the next question from the line of Charulata Gaidhani from Dalal & Broacha. Please go ahead.
Yeah, hi. Congrats on the good set of numbers. My query pertains to the increased expenses in terms of R&D spend and also other expenses. Can you guide in terms of how far R&D spend can go up to, and also other expenses?
Yeah, Charulata, R&D expenses will stabilize around this, whatever has happened in this quarter, because we have got an impressive pipeline going forward for US and Europe of complex injectables, difficult to formulate ophthalmic suspensions, as well as XR, that is sustained release tablets. So the point I'm trying to make is, we will invest money at the right time and at the right point to maximize our return on investment. But for the time being, for the next 3 to 4 quarters, you can take this as a sort of figure for R&D per quarter.
Your question on other expenses, Charulata, you must remember that almost 60% of our other expenses are actually variable and attached to the sales. So you will see a kind of an increase in them whenever the top line increases.
Okay. And have there been any filings, additional filings for regulated markets?
Filings will keep happening. Whether it happens in this quarter or next quarter, that is fine. But during the year, we will target 6 minimum filings for the US and Europe separate.
Okay. Fine. Yeah. Thank you. All the best.
Thank you.
Thank you. We have the next question from the line of Aditya Khemka from InCred Asset Management. Please go ahead.
Yeah, hi. Thanks for the opportunity. Firstly, on the API side, that capacity that we had increased in Patalganga, I think the capacity had gone up 3x. Is the entire capacity now utilized because we are seeing a decline in external sales due to internal consumption?
No, Aditya, capacity is yet to be fully utilized. But whatever we are making right now, majority of it, like 65% to 70% is going in internal consumption. Meanwhile, we had built an extra building in Patalganga 2 years back, and we had provided for about 12 reactors. So that will be taken up during this year as soon as the monsoon is over, around November, with increase in warehousing capacity also. So that should again increase the manufacturing capacity by at least 50 to 60% further. So we should be in good stead within 8 to 9 months from today.
Yeah, understood. And so therefore, currently in Patalganga, what is the capacity utilization that we have of the total potential capacity that we can have there?
Right now we are utilizing 65% of the capacity.
Understood. And second question on the US business. So while Brinzo, obviously we did not get the entire profit share, but what was the milestone income this quarter from different products that we must have partnered with our partners?
It was around 15 crores.
15.
Yeah.
Understood. Last question on the gross margin pressures. So, we keep hearing from other pharma companies, price of raw material, freight cost has gone up, and that is impacting gross margins as well as, other expenses because of freight cost. How are we placed there, and what has been our experience?
Yeah, our front-end partners abroad, I won't mention any names, but have been empathetic enough to understand the position which we are facing, and we have appealed to them from time to time when realistically we have seen hike up in cost or freight or whatever. So to that extent, things have been under controlled pressure. I wouldn't say there is no pressure. Obviously there is pressure, but we have been able to control it.
Understood. And just lastly on the new logo, new corporate identity, is there any major shift in the strategy along with this, or is this something which is that's been done to give a new brand to the company? I mean, just trying to understand the purpose of the new identity.
Aditya, you know us long enough to know that we would not just do something to paint a picture. Obviously, the new logo indicates and signifies a shift in the manner in which the company now thinks. It is driven by a couple of things. Number one, of course, the correction in all our issues related to the reg markets, which have allowed us to come back on our feet and stand strong. And that allows us a lot of leeway to push ahead in the India business as well. So certainly the logo indicates a new Indoco.
Understood. And sorry, I had one more. On the personnel changes, have we done any significant top level, mid level changes in the India business? As I understand it, we needed some new blood, new rigor in the business to push it ahead. So if you can talk about a bit of if there has been any significant changes at the medium to top level at the India business.
Aditya, in the India business, we have added a position of Chief Marketing Officer to drive strategies and particularly push new introductions and their performance to create a larger appetite for growth. In the API business, we have a person, the level of Vice President, Technical Operations, to drive the API technical production and process side going further. In API business development, we have a person at similar levels who will further drive API standalone sales for the organization. In human resources, we have a person at senior GM, AVP level coming in, and human capital optimization, specifically in the Indian sales and marketing side. A function has been created to look at SFE, sales force effectiveness, increase per man return, and overall see that the organization is ready for all the new opportunities.
Thank you, ma'am, and all the best.
Thank you.
Thank you. Before we move to the next question, we would like to remind participants to ask a question, you may enter star and 1. We have the next question from the line of Surjit Pal from Prabhudas Lilladher. Please go ahead.
Hi, good afternoon for good set of results. Could you just throw me out is that what kind of percentage of profit share you have with your partner, brinzolamide and other products in this?
Surjit, I think you'll appreciate that there are certain confidentiality clauses in all our agreements which do not permit us to divulge specific numbers and specific terms and conditions of any contract. So by that I'm bound, not to give out classified information.
Not an issue. The initial time, I mean, their expenditure on R&D during the development period, they are supposed to deduct it from the initial profit before sharing it between you and Teva. So that cost is totally deducted or still remain to be deducted?
We didn't understand your question. Can you repeat?
See, the initial profit will be deducted by whatever the investment made by you and them during the development phase, right? That is the...
All costs have to be deducted. Whether our investments, their expenditures, that cost and profit share, right?
Yeah.
So now it is all clear. So whatever the profit will be coming, there will be no additional cost to be deducted as of now.
Yeah, perfect.
Okay. Could you throw some light on domestic market growth this time? What kind of product? It is mainly antibiotic, anti-infective, or pain management. What kind of product you have, got the good traction this time?
Yeah. So as I said in the beginning, two products really stood out for us this quarter. One, of course, was Concall Plus, which is a nasal decongestant, which moved very well because of the third wave of COVID and its utilization. That is one. The second product which did exceedingly well is an antibiotic azithromycin brand ATM. We are now the third largest player in the azithromycin market. Our brand is doing exceedingly well. These are the two products in addition to some other mouthwashes, etc., which also did well. Favipiravir, Fevindo did well. But other than this, it is our non-COVID basket also which did very well, which has other respiratory products like Febrix Plus. It has a whole host of stomatological products. It has got other antibiotics like cefpodoxime. Because after the second wave, there has been good amount of use of upper respiratory tract related antibiotics. So unlike the first wave, it was not just azithromycin but the other antibiotics. So overall respiratory antibiotics, both segments did very well. And other than that, many of the other segments on a very low base of last year have done considerably well.
And how do you think that this will continue, or do you think there's some other reasons to drive going forward?
So Sujit, we are getting into the biggest quarter for the Indian business for companies like us which have high acute therapy products. So at least in the shorter term, I am very sure this will continue. May not come from exactly the same molecules, but overall for the company, you will see good performance even in Q2.
Okay. Thank you and all the best.
Yeah.
Thank you. Participants, if you have a question, you may enter star and 1. We have the next question from the line of Rajat Srivastava from InCred Asset Management. Please go ahead.
Yeah, hi. Thanks for taking my question. Aditi ma'am, we are earlier guided for 850 crores of India sales in FY22. While the first quarter has seen exponential growth, do you think we are on track to achieve this 850 crores of sales? Because why am I asking you this is because even if I take the same run rate for the next 2 quarters and knowing that the fourth quarter is generally weak for India business, I think we'll still fall short of the 850 crores of guidance. Can you comment on that, please?
It's a tough question you're asking me in the first quarter of the year. I sat in this very place 3 months ago and told you we'll do 850. And I think after my first quarter performance, in fact, you should have greater confidence in me than before. Right? And what is 80 crore for 850 crore for a catch-up game? Don't you agree?
Right. Ma'am, I do, but the first quarter has seen a lot of sales coming from COVID-related products like Wall. And why I'm asking you this question is because the COVID cases are subsided right in the last quarter. So there would be some bit of sales tapering down from that segment.
Okay. Other segments will catch up. Don't worry.
All right. And also, ma'am, there has been some increase in the depreciation cost. Like, may I know what is that attributed to? Like we were doing around 18 crores run rate, and now it's 22 crores for this quarter.
Yeah, as a policy, we had said that we will apportion the ANDAs and European dossiers. So we have this quarter over apportioned it.
All right. Okay. Also, so on the tax rate, I've seen some bit of jump on the tax rate. It's around 35% for this quarter. Any comments on that?
I'll talk about elaborately. Currently, we are in full tax bracket, and this year, because of MAT credit, there was quite an amount of MAT credit which we will consume this year, and from next year we should be in the new regime of 25%.
All right. And okay, so for this year it will be around 20-25% range, right?
Next year onwards.
Okay, next year onwards. All right. And so lastly, on brinzolamide, when do you expect incremental competition setting in for this product? Because I think right now you're the only generic, right?
We cannot predict about competition. That's very difficult to predict whether anybody has filed or got approval or whatever. I mean, whatever is in public domain, you and I both know.
All right. Okay. Thanks.
Okay. Thank you.
Thank you. Participants, if you have a question, you may enter star and 1. We have the next question from the line of Sudarshan Padmanabhan from Sundaram Mutual Fund. Please go ahead.
Yeah, thank you for taking my question and congrats on very good set of numbers. My question is a little bit more broad on the industry, the US business specifically. What we see, I mean, I'm not specifically talking about Indoco, but broadly most of the companies have disappointed in the US numbers. I just would like to understand, I mean, are you seeing more price erosion from the, on basically the oral solids or any specific category? Or is it because there is a, higher amount of inventory that is being built up, so there is a slower sales that's happening? I'm talking more from an industry side.
You're right. I mean, there are common products, like immediate release tablets and liquid injectables. There is bound to be pressure as inventory builds up. So to that extent, you're right. But now, bigger companies and specific companies like ours are pursuing very niche molecules. The important part is being there on time, on dot of time. And if you can crack these molecules, you are along with a select few, 3 to 4 companies on day zero. And whereas for common products, there are at least 12 to 14 players on day zero. I think that makes all the difference.
Yeah, sure. And just to, if I look at, your the costs, I think there has been some kind of a cost increase that specifically happened on the other expenses and the employee cost side. I mean, specifically the employee cost. Has there been any kind of, one-off incentive that has basically given for the staff costs?
No, the increments for the year to all the employees were announced on dot in April. So this is the employee cost for this year. Throughout the year, you will see every quarter this kind of employee cost. That is point number 1. And like Aditi said earlier, other expenses of promotion and marketing and travel for India business will vary with the increase in business. 60 to 65% will go up as the business goes up.
Okay. With respect to Europe, I mean, are we standing by the guidance? I mean, do we see that Europe should continue to do pretty strong this year? I mean, any color on how the European business is shaping up?
Yeah, Europe is strong. There's a good, very strong position. There's a very good order pipeline. We can foresee next 3 to 4 months of very good orders. So there should not be any doubts on Europe.
So we should be achieving that set targets, whatever.
Yeah, fully.
Achieved about more than 23% margin. So are we going to see a substantially higher margins going ahead for this year?
So the first quarter margins, as we already discussed, are a function of a couple of things. One is the huge upside to some of the products we got because of environmental conditions in India. And the other is also because of costs related to India business did not fully come out. So as the year goes on, Q2 for us is a big quarter. So I think by end of first half of the year, we will be in a much better position to talk of exact margins for the business. But as of now, both India, international look to be set for good performance.
And finally on tax, I mean, given I think next year you are going to get into the new tax regime. So just, I mean, what is the kind of tax that we should see for this year and the next year?
This year you can take under tax 35%, but for cash flow purpose, half of it will come from MAT credit and only half will be payout actual, and next year onwards 25%.
Okay. Sure, thanks a lot. I'll join back with you.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and 1. Mr. Manchanda, would you like to go ahead with your questions while we wait for participants?
Yeah, I'll take the question. Good afternoon, sir. So my question pertains to the milestone income, which we booked about 15 crores this quarter. Does this milestone income pertain to new approvals, or it pertains to sales-related goals that you would have agreed for?
No. It pertains across the board to new products.
These milestones we collect based on specific R&D achievements against set targets for many of our clients.
Okay.
Okay.
So are these R&D achievements linked to approvals, or even they are also linked to development milestones?
Spread across, where the like Q1, Q2 gets done, as in a product formulation, then validation batches. After that, on completion of certain amount of stability, then on filing, and finally on approval. So various stages. Okay.
So this would be a recurring number.
Yeah, definitely.
Got it. And sir, could you guide on new launches in the US expected during the year?
Yeah, there's one ophthalmic solution which we will get approval in April. By March end or April first week, it's about $500 million and quite a tricky product to develop. So we should be among the 3 or 4 players from day one. Patent expiry is in April.
Okay.
And there's a sustained release tablet which we should be in the market by October or November of 22.
Vishal, if you want to know in nutshell, we have a very strong and good pipeline for US market. It comprises of almost 25 products. 6 out of them are solid dosages, which includes XR tablet as Sandeep sir mentioned. We also have 13 ophthalmic solutions, out of which 4 are suspension and 9 are plain solutions, and 6 injectable. The market size of this product put together is $4.6 billion, and these are going to be launched over a period of next 2 to 3 years period of time.
Great, sir. So just to there are 13 ophthalmic products pending approval. Is that right?
Yeah.
Got it. And so just one more clarification. In your press release, you have pointed that you have 2 ophthalmic suspensions on the market. So one, as we know, is brinzolamide. Which is the other that you would have an approval for?
The name cannot be mentioned due to confidentiality clause with the customer.
Okay. Got it, sir. Thank you. That's all from my side.
Okay.
Thank you. Participants, if you have a question, you may enter star and 1. We have the next question from the line of Vivek Gautam from GS Investments. Please go ahead.
Sir, my query is with this work from home and pandemic world over, people staying mostly at home. So with the increased usage of laptop, mobile, is it increasing to more ophthalmic drug usages and which is beneficial to us? And number two is the competition intensity in ophthalmology division in US and Europe much less than the other generic sort of a thing? It's a complex generic, which is again a useful thing for us.
I'll answer both your questions. The first part, I think you were pertaining even to India, not just US.
Yes,
yes, there is something called computer vision syndrome, which causes stress because of increased screen time usage. And therefore, you see a lot of tear substitutes in particular getting used more in ophthalmics. So therefore, you've seen that although ophthalmology practices got impacted, ophthalmic products for tears, we have quite a few products there for India also have done quite well. Coming to your query on US and competition, ophthalmology, largely because there are a lot of chronic sides to its therapy constitution, and mostly geriatric based kind of anti-glaucoma and macular degeneration. So these are therapies which are showing good growth in US as a segment, and yes, they are very difficult to develop and manufacture, and also sterile. Therefore, there is less competition.
And where do we stand in ophthalma field in India and abroad in terms of exporters?
In India
and abroad, both.
In India, we are ranked, if I'm not mistaken, 8th among various players in the ophthalmology space. We jumped a rank this year in India. We have a long way to go here still. In US, since we are working with Teva, it will be difficult to say where Indoco stands, but Indoco Teva, I think you have to give us some time to make a mark for our position in ophthalmology. The market is dominated by innovator players like Allergan, Alcon, Bausch & Lomb, amongst others.
And Madam, our compliance, a few words on our compliance track record with FDA, because that is a great bugbear for Indian drug companies. I believe our Goa plant and other plants are heading a very good compliance track record. If you can throw some light on that, sir.
Yes, so all our sites are now FDA compliant, except there is just one on which we have an overhanging warning letter. The issues related to warning letter, the resolutions are complete, updates have gone to FDA. And in fact, we have been inviting FDA time and again to come and audit us. On the 12th of last month, we have made another attempt to officially ask them to come and audit us again. I'm hoping this time we will get a better response. If they come down to our site, they will be able to clear our warning letter and pave the way for more approvals from Plant 1, which is the solid oral site for US FDA. Other than that, the other sites, that is site 2 and 3, are all clear by US FDA and have been getting continuous product approvals in those sites.
Thank you, ma'am.
Yeah.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and 1. We have the next question from the line of Aditya Khemka from InCred Asset Management. Please go ahead. Mr. Khemka, your line is unmuted. Please go ahead.
Yeah, hi. Sorry, I was on mute. Thanks for the follow-up. Sandeep, sir, on the US business, whatever products we had with Teva, which we had to withdraw because of the warning letter on Unit 2 earlier, have we relaunched most of the products that we wanted to relaunch post the warning letter was removed, or there are still certain products that we are yet to relaunch?
No, we have not yet relaunched. 2 of these products we will be launching in either December or January this year, and others will then follow.
So how many in total do we plan to relaunch over the next 2 years from that portfolio, the legacy portfolio with Teva?
4.
4. So 2 will be in December, January, and the other 2?
Other 2 would be after April.
After April, so FY23.
Yeah.
Okay, understood. And Aditi ma'am, you alluded to hiring a chief marketing officer in the India business. Can you talk to us a little bit about his background and how is that particular person incentivized? Is it on market share, on cash flow, on profit, on ROI? How do you evaluate that person's performance?
Aditya, you'll agree that anybody hired at that senior level in the organization is directly or indirectly responsible, and of course a lot of linkage in his CTC will be there for deliverables. Regarding background, as I said, we looked at the gaps in our India business of past and specifically identified areas of weakness and targeted those. Our biggest area of weakness in the last 5-6 years has been our inability to create large new launches. So we have succeeded to some extent in dental, but in other areas, while we have done well, we have not managed to create a large new brand and identify early opportunities. So selection was guided by that. Yeah.
Understood. But just one more clarification on this response, Aditi ma'am. So while obviously you evaluate him and his performance is linked to the company's performance, my question is, what is the criteria on which you evaluate him? Is the criteria like ROI? Is it cash flow? Is it market share? Is it sales? I mean, just some indication. I don't want an exact sort of...
Market share, Aditya.
It's market share.
See, you will agree that at 29 rank where I stand today in the retail audit, it's a very crowded space, and there are at least 5 players at 0.66 around me and with me. In a good month, I go to 0.7 and then I have to come back. It's a steep uphill from here if I want to jump ranks for various reasons. You must have also noted in IQVIA we stand at 21, and in fact if you actually count the number of prescriptions we generate, we are not too much lower than a company like Glenmark also. The problem is the kind of prescriptions because of the portfolio. So there is a definite thought process in correcting this portfolio and moving towards a much higher return per product, higher prescription, higher usage per prescription kind of intent that we are going after. Already in this quarter, because of various reasons, you must have seen our per man return has already gone up to 2.7. And from here on, I expect it will only climb.
Correct. So that was my next question. So in the India business, we don't need to hire incremental MRs, right? Because we are sitting at 2.7.
There would be rationalization if at all.
If at all. Okay. And what is the target for this PCPM for you, madam? I mean, today's 2.7. Where do you see this 3 years down the road? What are you aspiring for?
2 years down the road, 3.
3. And what is the ideal level at which a company with Indoco's portfolio can operate?
It can go up to 4 because we have such a high acute. And I don't want those to slow down either. Right?
Makes sense. Ma'am, we had one new launch that was stuck in litigation process in India because of a patent issue with the innovator. Any updates on that litigation?
Yeah, so we had actually gone to Supreme Court to ask for a faster vacation in the stay, which was given by High Court. And Supreme Court said that they cannot interfere, but they did give the High Court a deadline of 3 months within which to close this issue. So I'm hoping in the next couple of months we will find resolution.
Okay, so the deadline is there in the next couple of months, is it?
Well, it's a suggested deadline. Supreme Court could not put it on, but it's a strong suggestion, so I believe it will happen.
Okay, and in the case we prevail in the High Court, are we ready with the inventory and the marketing plan to launch it immediately, or we plan to do that after we get the vacation?
It's all ready.
All the best, ma'am. Thank you.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and 1. We have the next question from the line of Aditya Khemka from InCred AMC. Please go ahead.
So thank you again for the follow-up, ma'am. On the Sandeep sir, on the European business. So while obviously our sales are ramping up, but I just wanted to check with the AOK tender. Is the tender supply going to be like evenly spread across the 2-year tender that we have and across the quarters, or would it be lumpy in certain quarters and then lumpy in some other quarters? I mean, are we shipping like 6 months inventory in one quarter?
No. Absolutely smooth.
Okay, it's smooth. Okay.
That's what going very strong.
Understood. And any further improvement on the Goa one? I mean, Aditi ma'am did mention that Goa one, we are USFDA, we have done the CAPA. But any indications from USFDA as to when do they want to audit, and will it be a desktop audit, a physical audit, anything?
Aditya, not to us specifically, but to the industry, they've been giving shifting goalposts for when they're ready to do physical audits. And They've been very sketchy about how many virtual they will do. So really very difficult to answer. But we have tried again last month, and I'm hoping to hear something soon.
Got it. And on the API side, we are running at 65% of our total potential capacity, and clearly we had customers for our API when we were able to sell externally. And I'm assuming those external sales were profitable, which means there is demand for our product if we have enough capacity to sell more. Does that tell you that you should expand capacity faster? Maybe if there is not space in Patalganga, maybe an alternate site? I mean, just want to dig your brains on that.
Yeah. That's why we are doing that expansion very quickly. And certain other products which have gone up in demand, we are pushing from the kilo lab to Patalganga. The validation is being done very quickly. So by another 2 quarters, you will see very strong performance.
But Sandeep sir, we will hit an expansion roadblock in Patalganga at some stage, right? It would not have indefinite space, or does it have large enough space to accommodate whatever plans you might have for next 3 years?
Aditya, I'd like to just come in here. If you look at the capacity of Patalganga today, because we wanted to very much be in command of the technology, we today have patents on most of the processes we use for manufacturing the API. And we've been pretty conservative on taking manufacturing out. So in addition to the finished API which comes out of Patalganga, we do make several stages of product there. In addition to that, we make several stages at a back-end site which makes our starting materials or first few stages of product. The whole thing is being looked at once again to try and outsource capacity for some of those stages so that internal capacity can be further freed. So in order to add capacity or to be able to make more API, in addition to what Sandeep said of expansion within Patalganga site itself, we are also looking to do some kind of third-party manufacturing for some of the products. So that should give us faster results in the shorter term. But after that, certainly there are plans to further expand API.
Yeah, so the only reason I'm asking this question and I'm wasting your time on this is because, we see all the other API companies in India expanding capacity, seeing unprecedented demand, reporting extremely high growth on the API side. So I'm just wondering to myself, for an organization like Indoco, is it fair for you to outsource your products to third party, or is it fair for you to build more capacity and in-source third party products to your API plant? I mean, which is a better capital allocation decision, and or is it a bit of both? I don't know. I'm just wondering, which is a better way to go about it.
It is both, but I can tell you this, since most of our reg market finished APIs are our own in the files. We are happy to make it on our own there. What I would do really is outsource many of the stages at the beginning so that the capacity can be freed for finishing the product more. Right. The first quarter had a bit to do with unpredictable extra ordering of brinzolamide for the future kind of. So the API division also was set a little bit off track because they had to put some things aside and go back to making more brinzo API. So some things like that. Otherwise, I can assure you that we'll have enough API to sell by end of the year.
Right. No, makes sense, ma'am, and I will leave it to your wisdom, obviously. But it just seems to me it's an industry trend where all API manufacturers are trying to in-source more products from other people and manufacture for them because the margin seems to be pretty healthy and the ROIs are pretty good. So I was just wondering which is the right way. So last question for Sandeep sir. Sandeep sir, what was the operating cash flow this quarter for us?
Cash flow was around between 65 and 70 crores.
That's the operating cash flow or the cash flow after capex, sir?
Before capex. Before capex.
So before capex, 65-70 crores.
Yeah.
And after tax?
Yeah, after tax.
Oh, fantastic. And what is the capex we incurred this quarter?
21 crores.
21 crores. So the plan for full year remains around 100 or 50 or 70?
80, around 75 to 80.
75 to 80. Okay, makes sense. Thank you. Thanks again.
Thank you. Participants, if you have a question, you may enter star and 1. We have the next question from the line of Charulata Gaidani from Dalal & Broacha. Please go ahead.
Yeah, I just wanted two things. One in terms of the profit share for US. In this quarter, our revenue has been somewhere around $6.5 million. So, assuming, say, if we supply $1 million for Brinzo, what kind of a profit share can we expect? Can we expect a 4 million, 5 million?
So Charulata, I think Mr. Sandeep explained this earlier. Probably you might have joined the call later. That we are binding with some of our customers, and we are really not free to discuss specific product-related margins, profits, etc. Safe to say that right now most of the US sales you see has come from supply of product and also from income against milestones for R&D work we are doing for the future. Right?
Yes.
Yeah. Okay.
Right. But then the profit share would normally be more than what is coming from supplies, right?
It has to be, but that will come in the time to come.
Okay. And second, in terms of the EBITDA margins, what kind of margins you think are sustainable?
I also answered this earlier. Last year we had guided to 19.5 to 20%, if you remember, for this year. But we started on an unusually great note, which is 22.8. I'm very happy for that. Depending on the circumstances of the environment, picking up of India actual operations, how the expenses come back, and how the second quarter pans out. At this stage, I'm pretty bullish to be able to do a good job on EBITDA.
Right. Yeah. Okay. Thank you.
Thank you. We have the next question from the line of Dinesh Kotecha from KRIC. Please go ahead.
Madam, good afternoon. Good set of numbers. And you said, we are in a good... But what guidance you are giving for the earlier answers was that the research and development will be in the region of 16 to 17 crores every quarter. Then also the profits, can we take a quadruplicate? I mean, can you make it multiply by 4 and just add another 10% for the full year?
Like I just explained, maybe let me repeat this. Q1 is an unnaturally different quarter. India business has got upside from a few products, good sales from another set of products. Some of the expenses related to India business have not fully come back. As the quarters progress, some of these expenses will come back, but many of the other products which are not selling very well because our people were not out in the field will actually start doing better. Under the circumstances, it is very, very difficult to actually give you an exact number on the margins, but you can take it from me that the performance can be maintained or better.
No, but another question is that your profit, your tax is already 55% of the entire year's tax. I mean, if I take that same ratio of the tax and the profit before tax, can I do that calculation?
Explain, in this year, we would be hit by a higher tax rate, but we would have utilized our MAT credit as well.
Yeah, I heard it. But I'm just trying to understand, when we are now let us say we are now in the third gear. So our full year results will be in the fourth gear. I mean, can I do that calculation on my own?
Yeah, certainly.
Okay, thank you very much, ma'am. Thank you. Wish you all the best.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and 1. As we have no further questions, I would like to hand the floor back to Mr. Rahul Arora from Nirmal Bang. Please go ahead.
I'd like to thank the management once again for extending their courtesy to us to hold this call, and to all the participants for their active participation as well. Thank you all so much. Stay safe. Any parting thoughts from the management if they would like to address, please feel free.
No, thank you very much. We've had a very good conversation with all the participants, and I'm highly thankful that all the participants took a very active role.
Stay safe and stay healthy.
Yeah. All the best to all of you. Thank you.
Thank you.
Thank you, members of the management and Mr. Arora. Ladies and gentlemen, on behalf of Nirmal Bang Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.